Question. Pierre, the floor is yours.
Thank you, everyone. My name is Pierre Du Bois. I'm the founder of Zamana Analytics. Thank you for taking the time to answer my question. My question is if there is a specific type of pitch consideration that should be kept in mind if you are a business that has been in business for a number of years and now looking to maybe pivot and grow with the venture capital. Reason being, I know that having some sense of sales is a big part of it. Right now, I know from my area, I'm thinking a little bit in terms of resources I'm still putting together, but I'm thinking, are there specific ideas or things that as an entrepreneur I should have ready for a VC that might be different because I've been in business for 12 years, and I'll hopefully you guys have a great answers to questions. I'm sure you do, and thank you in advance.
Hi,
Pierre, this is Tage. Quick question for you. So it sounds like you've been successful for 12 years. So are you raising money for something unrelated and you're the owner, but it's a different company? Or are you raising money for strategic purposes? So what's the purpose of the pitch you want to do? Because it's going to be different, right? If you're raising strategic equity or debt for your 12-year history company, that's one thing. If you're raising money for a new venture, you can use your experience, but the way you raise it for a VC for a new venture is going to be different. So, what's the purpose of what you're asking? Just curious.
More the new venture, basically. I'm thinking the product that we're trying to put together. It's a calculation on an app, and I think it may attract a different client than what I've had before. That's the concern. I'm not 100%, but that's what I'm thinking. So I'm wondering if there's things I need to be setting ahead to get ready.
And I'm sure people have a bunch of stuff to say here and chime in. But I will add quickly, I would say for you, you have 12 years experience you mentioned. I would absolutely incorporate that into a quick 2 to 3 minute pitch on the management team and you, meaning here are the things that you've done, not just your successes, but here's some of the losses or trials and tribulations that you've had. Here's how you've overcome them. What it shows investors is you have the ability not just to grow, but when things are down or chips are down, how do you react, right? Because most people are going to invest in you. The fact that you have historicals that you can show on what you've done, you're talking about for the new company, which will obviously be what you're going to do with the market. What's the solution you're solving? What is the problem you're solving in the market? How are you going to monetize it? And what your investors will get back from the then model perspective. But definitely lead with your experience. I'll be my macro level view is use your experiences, talk about what you've learned and done, and how you're going to incorporate that formula into what you're doing now going forward. I hope that helps. My name is Tage. I'm done.
Hi, can I add to that now? That was perfect advice. And it's the kind I have seen people take that advice to heart too much and they end up talking about themselves. Tej is absolutely right. You are going to be integral in this pitch because you've got success behind you. At the same time, you need to be able to identify which areas of the pitch are going to need a slightly different emphasis from, say, a pre-seed startup from a young group who are pretty new in business. So you have to identify where you can emphasize points and perhaps just spend a half a sentence or a few seconds or however the pitch is going, a couple of extra words on that aspect. And part of that will be your credibility. Because ultimately people are going to, they're talking about yourself too much, value that you bring. That's me.
Hi, Pierre. This is Callum in the green background. I come across that quite often, particularly given that quite a majority of our investments are for mature founders. And some of the suggestions I would have would be number one, to actually think about a new corporate entity totally. And if there is history between your current entity and the potential new entity, I would start having a very clean set of books to ensure that there is no baggage between the current company and the potential new venture. Have all of that corporate structure sorted out because some of that complexity might come up and may or may not be favorable, or it's better to have it clean before you set it up for a VC, because that could come back and be problematic. And the second thing is, if you've got a business for 12 years, there's probably a lot of legacy. There's probably potential IP risks, or maybe shareholders conflicts, or maybe partner conflicts, other elements or people or things like that. So it'd be great to cleanse. I have a fair bit of experience in investing in these types of new ventures as a spin-off of existing companies. This is Callum. I'd be happy to help offline.
Hi, this is Wu. Could I ask Pierre a question? Pierre, you said you're pivoting. Is there a reason for the pivot?
Good question, Wook. Part of it is from my experience, I've worked with smaller businesses over the 12 years, mostly through services. I'm finding that with advances in the technology, that the services part, while there's still some things that are great about it, there's some needs that are not getting met. So there's that part of it. The challenge becomes right now it's still an idea with some programming that needs to be done. But one of the other issues that I'm still trying to identify is um, I'm trying to guess no, quantify is the right word, but identify how much of a shift that there is. But I know that there has been one just because it's been a while, basically. If that makes some sense and answers the question.
Yes, I think so. So if I understand correctly, if you're during your testing at the moment, and that turns out to be successful, you're going to do a hard pivot away from your current business. Is that right?
I'm thinking that not 100% that's it's going to drive away from the current business in some levels, because some of the services really do need to be addressed through a tool, and that kind of changes the delivery if it makes some sense.
Okay. I still think that Callum is right. I think you should look in this day and age. It's very easy to spin up new companies. Back in 2000, that was the difficulty of starting a business. But now anybody can start a business. It's almost virtually free. But then hence that causes the competition issue of scaling a business, and that's where it's difficult now. I would really say to keep the books clean and not have this friction during due diligence with a potential investor, that you should separate out a clean entity. And while you're sunsetting the other entity, just make sure that all your books and records are completely bifurcated from each other, and making sure that there's clear demarcation. So I think that is the better route than trying to maneuver or pivot and then explain the story of your history, because I think that while there may be investors that are fine with that, I think you're going to run into some friction.
Okay. Okay, great. All these are great answers, by the way. Really, really love them. And thank you.
Thank you, Pierre, for coming up here. I hope to see you in future rooms. Definitely come again. And next up, we have David. David, are you there? Okay, maybe not.
Dawood.
Dawood? I don't think he's here. Okay, we'll do one more question and then we'll do intros from the new mods. Gio, over to you.
Saji, it's a one-stop shop for if you want to know more, you can go to my Instagram. Question is, I've been on a fundraising with Essence, and I got a meeting on Monday. So Knesian, it's a corporate venture fund, is Meditop, which raised about 15 million.
Yeah, I just give, but this is firm or any other investment firm is in a public forum, because let's say the validity, they could be in the room listening, and then you lose your deal. So never say the name of the group. That's always a side chat. But the question you asked is very good. So that's just something that would be a good piece of advice for anyone, including experts.
Hi, Dio. It's Hakan speaking. I have an office in Turkey, in Istanbul, and if you can contact me offline, I'll try to help you to find out the more information about the companies you mentioned.
Yeah, and I think a better question would always be something like, how do I carry out due diligence? What is the process? What are the steps? What is the best way to carry out due diligence before meeting with a VC or an investor? So those sort of questions will give you, much better answers. So hope that helps.
Thanks so much, yeah, for advices. And Hakan, I'm gonna DM you right away. Thanks so much.
Thank you for coming up here. And new mods, flash your mics if you're a mod and you haven't done an intro yet. Okay, Tim, over to you.
Hey everyone, Tim Young from ENIAC Ventures. I started ENIAC 12 years ago, and we've raised 600 million since then. Currently writing checks between $500,000 and $3 million into A's prior to the Series A. We've done 10 unicorns, 3 decacorns, everything from Airbnb to SpaceX, so we're generalists. Prior to that was a 2-time founder, engineer, and patent attorney, write for Forbes, and also a professor at University of Hawaii. Thanks for having me up. Really appreciate it.
And also, my other question to the mods at the start was, what is your number one source of inspiration?
Wow, that's a great question. Number one source of inspiration.
Me.
Tim,
Always
me.
William.
me.
Thank you.
I need to think about that and come back. That's a really heavy question to get out of nowhere at 9 a.m.
Fair enough.
I'll loop back. Let me
Tim,
think about
you're
that.
my inspiration, so don't worry about it.
Yeah, was that yes? And so I
No, this
recognize the
is
voice.
Jonah.
Oh, Jonah, I am. Jonah's climbing in my. I'm liking Jonah every day. Every
Here,
room,
I'm
I'm
learning from one of
respecting him more and more.
I'm learning
Definitely on
from
the
Matt, who
blockchain
learned
stuff,
from
man. You know
you. So,
blockchain stuff like crazy. I was really impressed yesterday.
well, I appreciate it. I'm learning from Matt, who learned from you, and so I'm not a grandchild, but I feel like I'm somehow learning through you. You're passing down knowledge.
But thanks for having me up. It's humbling to be up here.
I'm unfolding Jonah right now.
What?
And next time you say William, you have to distinguish between good William and bad William because it's 2 of us in the room now. So, but we all know you were talking about me, Tim. Thank you.
Of course.
New mods, flash your mics if you're a mod and you haven't. Lily, over to you.
Hey, thank you very much. I'm Lily, founder of Propel Program, incubator for early stage founders of color. And I'm also a scout for New Sheet Capital as well. And let's see, source of inspiration. This is really hard because there's a lot, but I don't feel comfortable totally naming names, but I do have a mentee in particular that is just finished college, and she won her school's startup competition, and she's quite the inspiration. So I feel like it's people like her.
Amazing. Great. Hopefully we covered all the mods. Oh, I see Tyler.
I'm ready. I'm ready for my answer now. Can I give my inspiration answer? Is that okay? That was a good one that kind of inspired my answer. But my grandmother was amazing. She was an orphan. She was orphaned during the Great Depression, which was a really tough time to be an orphan in the U.S. And then when she was 18, she joined the U.S. Navy. She was the first 100 women in the Navy. She became a spy in World War II. And then had my dad, and she's just hardworking, sold the earth, built everything from the family from nothing. And so I don't know, she's an amazing human being, and I miss her a lot.
Amazing. Thank you, Tim. And last up, we have Tyler. Tyler, are you there? Tyler Wang.
Yes. Sama, hi.
Intro. So it's intro plus your number one source of inspiration.
Sorry, yeah, can you repeat that? Having a bad signal here.
An intro and your number one source of inspiration.
Oh, number one source in inspiration. Got it. Okay, great. Thank you, everyone. Good afternoon here from Washington, D.C. Great to see so many familiar faces. Tyler Wang, 3X serial entrepreneur, and we do Salesforce CRM, as well as automated other SaaS product solutions for our clients here in the Mid-Atlantic region. Number one inspiration. I think that'll be I would turn to my faith, right? My Lord and Savior, Jesus Christ. Something I take my faith very seriously. So just want to put that out there. Thank you again, Soma and Sohail, having me. I'm done speaking.
Amazing. All star mods. Lindsay with the horse. Did you do an intro?
No, I was being invisible.
Over to you. Intro and source of inspiration.
That's cool. So I'm Lindsay on the horse, and I love helping entrepreneurs. I also love teaching them what it's really like out there in the big, big world. I think that my biggest source of inspiration personally is I think it's that moment for entrepreneurs when they realize that they can, in fact, make their concept or their product work. And I think also when they have those growing pains and those necessary moments where they have to make changes and pivot. And I think that in that full create firing on like all cylinders, which comes from, actually I think a lot of trauma and also a lot of getting told no. Um, I think that that's the part that's very inspiring for me is seeing people kind of rise above that. So, and myself rising above that. So anyway, Lindsay on Horston speaking.
Amazing. Thank you, mods. And let's move back to the questions from the audience. Uh, Don Chris? Sorry, my bad. Jay. Jay, over to you.
Hi everyone, good morning. My name is Jay Mila. I am the founder of JL Cybersecurity. We're a very early stage cybersecurity company. Formed a team of seasoned cybersecurity experts targeting medium-sized businesses and specializing in pen testing. My background is as a founder is with the New Worlds Institute, and I'm also the head of marketing for Litecoin, the Litecoin Foundation. And my question is a question of scale. When targeting funding, and you're sort of in between a seed round and an early stage or series first round of funding, are there certain things that venture capitals look for in the way of how you need to scale your business or how you want to scale your business? And specifically in my sector, it has to do with engineers, which I have a lot of. And of course, these sort of cybersecurity engineers are reasonably well paid. So I'm just curious if that's a little too general, but I'm curious about how funding works with scaling of very specialist type employees.
This is
Jay,
Lala speaking. Oh, go ahead, Louise.
I just wanted some clarification. Thank you, Lale. Jay, when you ask your question, are you referring to the rollout method for scaling, or are you referring to how are you scaling it, as in going into other markets or a veterinary product that works on humans? That kind of question. Which way are you talking? Thank you.
Well, I guess it's a little bit of both, but basically, we have we have somewhat of a demand, and we're looking to hire the employees that want to work with us. And I'm curious about previous experience with how you would onboard a bunch of engineers, whether a VC would be attracted to the fact that you could grow very quickly because you have the talent necessary, or whether they would be more interested in how revenue would grow with your scaling of your business.
Can I take it? I mean, start. This is Lale speaking, and just wanted to say that VCs would love to see you grow the team, of course. So growth is a good sign of, business health. And so VCs would love to see that you're incentivizing the team as well as growing it. So anything in your capitalization table, being an indication of you hiring people prior to, any new VC would like to see that. would like to see that you're actually distributing the equity and you're hiring more people, and they would love to see the team growing. Actually, this is Lale speaking.
Thank you.
This is Wu. For you is your cybersecurity. You said when you're pen testing, this is typically managed services. So, you're saying you're going to scale your engineers to scale up your business to increase more managed services. Is that, am I getting that right?
Yeah, and increase our range of abilities as well.
And are you providing any type of hardware products on-prem type of equipment at all?
We don't have any specific IP, but we have a lot of tertiary services, software, and things that we would recommend.
Okay, I think that's probably going to be where you'll face your challenge first, is that typically traditional investors are not going to invest in professional services businesses because, as you already know, they don't scale unless you have humans to scale the business, and that's not necessarily the 10x to 30x revenue that or returns that VCs are looking for typically. But to kind of answer your question, if you were to have some type of scalable business that is in cybersecurity, yes, the primary metric that most traditional investors would look for is some type of traction in the sense of having retention, and in the sense of if you're some type of subscription services, is to know what your LTV and CACs are as to any other type of metric that you can provide. That would be most important, especially at your early stage. Now, if you're at a much later stage, then you're telling the business to adjacent markets, then that's a different story. Then it would be more about your fundable milestones as to how you're going to get into those adjacent markets. This is Wook, I'm done.
Thank you.
Yeah, and I guess it might make sense just to lay a little framework on like how they look at your kind of revenue and go to market as well. I mean, top line growth is really important, and this is kind of generalizing this. I know you're doing services, so this growth might be harder, and I think that's the issue with services is scaling is hard. Institutional venture capitalists are going to want to see, not like tripling or more revenue year over year. And, so that's important. And then efficiency as well on the go to market. So they'll look at churn very closely and then, back out and then look at your CAC, like cost of acquisition of bringing in, new revenue by logo or customer. And then then they'll back out the LTV to lifetime value, which is basically how much, revenue are you generating, on average per customer, despite across all channels, organic and paid and everything else. And then they'll go a step further and calculate the CAC payback, which is how long it takes effectively to break even on the cost of acquisition of a customer. And if that's below 12 months, then they're going to be excited, as long as the market size is big enough, and probably want to invest, lean in, and provide capital for you to invest more on sales and marketing, and your go-to-market strategy in general. If it's over 12 months, then you're running a little inefficient, and you need to find more efficient channels or pull back a bit. But if you're like below 6 months, then people will be really excited about your business. Hopefully that was helpful.
Very, very helpful. Thank you very much.
Thank you, Jay, for coming up here. Next up, we have Don Chris. Over to you.
Hello everyone, my name is Don Chris. I'm the founder of Catchup. At Catchup, we are solving a problem of nightlife industry whereby we are connecting online audiences to nightlife industry in real time. With COVID happening, a lot of people haven't been going out. So with the vaccination loading out, a lot of people are trying to, find their previous venues or trying to navigate the whole situation. So as Catchup, we are providing an application that is currently available on Apple Store and Android, where people can navigate the nightlife industry in real time. You can be able to know what kind of music and what kind of people are in a given place in real time. So my questions, I have like two of them, is how do you rate without revenue when you have some traction? And other question is, how do you get strategic angel investors that are interested in a niche market like nightlife industry, which has been traditionally stay the same even with the evolution of technology? Lastly, is during a seed fund.
Hey, this is William Andre. Two of them can be answered in one. But the first thing, you said you had traction. Can you define that? Like, because here's the thing. If it's not generating revenue, then the alternative is traction, meaning like for what you're doing, subscription based. And that has to be a large number. That makes it attractive to angel investors to get involved in. And so that's what I would focus on. If you're not there already, try to drive your subscription up. The people who sign up or download your app, to prove that it is a market for it. You already are in a good position because you already have the app up and running, and it's already. I think you said that it's already available for Android and Apple, so that's a good thing. That's attractive to certain investors. You're past the pre-seed stage or the ideation stage. The last thing, I think you said, what kind of equity should you give up? That's negotiable. That depends on when and where the investor comes in and how much you're willing to give up for that company for the capital that you are receiving. And again, that depends on your need at the time. I'm not sure if I'm not sure where you're at, except for I think you probably need some marketing capital, which is like right up my alley, to scale. Everything else you should have in play based on I think what you told me. Um, but I would concentrate on trying to build that subscription model up, get more people to subscribe or download the app, utilize it. There's also different revenue streams within the app that you could create, especially on the advertising front for nightlife. So, if you flush that out a little more, um, it's part of your, I don't know what your go to market strategy is as well, but if you flush those two things out that I just mentioned, I think that would be attractive. It is a niche thing though, so it's somebody who deals in that space would be your target when you're dealing with investors. But there's tech involved because it is an app. So I hope that helped. This is William Andre. I'd be happy to look at it a little more if you have something for me to look at. But I hope that helps you.
It's always humbling and scary to talk after good William, but I'm going to give it a shot and just unpackage that last question a little bit more and generalize it. So how much dilution should you take, or how much of your equity should you give up in the seed round? It's a really great question. And, I put a lot of thought into this. And, as a venture capitalist, I'm trying to maximize my ownership. As an entrepreneur, you should be, minimizing how much you're giving up. But I think, as an entrepreneur, what I would do is look at look at your plan, look at your, the model you have for cash burn and burnout, and try to get smart on on what milestones you need to achieve to raise your next round. So like in this case would be your series A. Where do you need to be at revenue, or MAUs, DAUs, or what metric do you need to hit to raise like a $10 million series A, and then start working backwards with a financial model and say, okay, like, these are the hires I need to make. This is the marketing spend I assume I need to make. This is my operating costs, and then back that up till today, and you arrive at a number, and then I would give yourself a very healthy buffer on that, because assumptions can be wrong, and everything takes longer than you think. So I'd give yourself more time, and I would say at the minimum 18 months, but I mean, I'm a lot more comfortable with more than 24 months, especially these days when we have no idea what's going to happen. Like we could be going into a recession where you need to kind of, stay alive, circle the wagons and stay alive, and it might be harder to raise capital, a year and a half, 2 years from now, but then arrive at that number. And that's how much you need to raise. And then from there, then it comes down to a matter of valuation. And so, hopefully you can, valuation isn't as well as good William said was a, negotiation, but try to get that to a reasonable number. But, as a bench 10 and like 25% dilution. Hopefully that's helpful.
Oh yes, thank you so much, William and team. I really appreciate that very feedback. And yes, just more clarity of how to get strategic angel investors. That's like another question that I had in between there.
Well, actually, I thought I answered that earlier. As a strategic angel investor, um, I gave out the things that you should concentrate on. And if anybody has a different answer to that, feel free to chime in. But focus on since you're not generating revenue, focus on your subscription um, base and grow that numbers. If you're showing proof of a market for your product, and I am gonna be honest with you, I have received a similar um, pitch deck to what you're offering already, and I did not move forward on that because they weren't able to prove that part. That's what you have to do, okay, to show a possible path to profit. Why are people going to download your app and stay on your app? And these are in layman terms. Why are they going to download your app, stay on your app? How many numbers can you pull, and how are you going to be able to sustain? So that's how you attract an angel investor in the beginning, unless you already have uh, people in your wheelhouse that know you automatically, and they'll invest in whatever you want automatically as like a friends and family or something like that, because they just want to see you succeed. But when we're talking about going to an outside pool of people who may not know you and receive a ton of pitches a day, that's kind of how you get their attention. So I hope that was helpful. And again, like I said, in the interest of time, I'd be happy to look at what you have a little more in detail offline and then give you some steps from there, if you don't mind.
Thank you so much, William. I will definitely reach out.
This is Lindsay on the horse. I just had something to add to it real quick. Just something that William said that I think is really key, and also all of us see this, and I just really want to, there's nothing new under the sun. So don't delude yourself when you come into a pitch room and think that maybe, and I'm not saying you're doing this, but just something to kind of to everyone listening, that there aren't other options, right? That there aren't other things we've seen. And also, we're not stupid. Many of us are developers or buy land or, are in the TV business or product business. And we know where China is, we know where development teams are, we know what things cost. We also know what they're supposed to make. So it's not like you're telling us something because we don't know. It's a test. It's kind of like when we go into retail at Walmart, I bring them an item. They know exactly what it costs. They own factories in China, right? They know everything. If I go and I make a deal with someone in the tech world, they know exactly what it costs for the developers to build what it is that I want to build. So I can't be crazy, with burn rates and acting like it's something that's so insane. And I'm not saying you're doing that, but just make sure that when you are providing those numbers, that it's reasonable, and also don't be too high and lofty that it's not something that someone can just go do or is already just doing. Because this is all about being competitive and also being reasonable. And I also find that people that are a little too over the top, and again, not saying this is you, but just something to note when you are pitching, make sure that you're kind of like realizing that you are, if you're at this level and you're trying to get money and you're trying to get other people involved, think about what they want to make, right? Think about their competencies. Think about what the investor wants to actually do when you're pitching them, And also, I've always found that if I sort of take myself out of it, like most of the things I'm working on right now, not that I don't want to make money. I don't care as much. I just care that the team makes money. Because if the team makes money, I'll make money. Like that's how it works. So anyway, Lindsay on the horse then speaking.
Hi, Don Chris. This is Wook. Just teeing off of what William Andre was saying is just to give you some more metrics to really focus on is if you're having good amount of acquisition and then you're having a certain amount of them actually converting by signing up to your application, I would say that you need to then focus on what the daily activity is. If you don't have revenue, if you're not having any subscription models at the moment, so focus and see what the daily activity is, if there's monthly activity as well, and then you can start seeing based on those metrics to see if you have something that could be having product market fit that could also provide some type of path forward to monetization. So these are the things that you want to then focus on. It's okay to provide acquisition conversion metrics, but oftentimes those are somewhat vanity metrics, unless you have a very unique ability, a unique channel that is not known to other competitors. Then you can bring that up, of course, and try to focus on that and deepen that channel. But I mean, it's really about daily activity for you at the moment right now, and how many of them are staying on your application for how long. So these are the metrics that you should really focus on.
Thank you. I really appreciate that insight.
Okay, amazing. Thank you for coming up here. And next up, we have Rose. Rose, over to you. Rose, are you there?
Hi, yeah, sorry. Hi, yes, everybody. Thank you for this time. My name is Rose, and I'm Indonesian, currently based in Singapore and in Indonesia. So I've been in direct B2C and B2B sales for the past 3 decades, and in business consultation in Singapore for the past 18 years, focusing in helping SMEs owners to structure their basis in terms of legal presence, cross-border taxation, owners' personal capital management, and partners agreement and the kinds. And I've also been running few side businesses in F&B, tourism and management consulting, those sorts. Now I am running a tech startup which I just took over from an existing founder that I consulted before, and he could not continue. So my startup business is a multi-sided platforms, which is a 3-sided open source for first producers and the businesses, second is for the end consumers, and the third element, which is what is so unique about it, is an affiliate or a referrals marketplace. So the platform would allow all businesses to get anybody, any platforms, any community, even any commercial space or advertisement space or point of interest to market for any businesses, products or services on success or ROI based. So what's so different about us versus other giant successful platforms is that
Hey
we are
Rose,
probably,
sorry to interrupt.
yes,
Just want to remind you, just because we have a lot of people, that this is not a pitch room. It's more of a Q&A room. Is there a question here?
yes, I'll have a question here.
Great.
Can you give me, I don't know, 30 seconds? Thank you.
Sure.
So yeah, so we are very much merchant business owners oriented instead of just consumer facing like any other platform that are in the market currently. Actually, our real go-to market begin with Indonesia. So I did a product market fit test in the 8 months before COVID with almost 1,000 producers across 4 major cities with proven metrics, and even the GMV and also KPI achieved for the producers and also for us, which is the platform. My question will be, in this kind of consumer-based platform, especially in Southeast Asia, which I've been for 3 decades, and with at least the big 4 unicorns in Indonesia, all being in these very sectors, they all started with burning a lot of money to acquire both sides. So if it's 2-sided, then it's both for the producers and consumers. If it's super app like Gojek, it's probably for every stages of their new business model. So us being at this early stage, similar as these giant boys who already started 10 to 12 years ahead of us, what would an investor at this stage like to see as traction or even projection to want to make this part of theirs, because definitely all these big platforms did not even have a positive earnings probably for their early few years or even till they even show the traction. Thank you. I'm Rose and I'm done speaking.
Hey Rose, this is Christian. I'm on the founder side, Rose. I've also got a platform. I've got a marketplace in the content sector. The thing I'll say is I think you when you're coming up against, you can't out platform a platform, right? They've got economies of scale and they've got network effects which you can't really touch. These people that can spend billions of dollars over 10, 20 years, it's really difficult. And what you need to do is beat them at the part they can't do, which is either go into a niche, and then you need to take advantage of innovators' dilemma and the fact that they can't move very quickly. So they built this big platform. They've got
they've got current customers, which makes them unable to make quick changes to adapt to the market. So, but niche is probably the best. I'm not sure exactly what space you're in, but if you can really you know get deep into one particular vertical and crack that, the large marketplaces, especially in Asia, because they tend to be all very generalist, they have a hard time competing with you as a specialist. It's just really difficult to compete with an established platform. But that's then the specialization is the one way you can do that. I'm Christian, done speaking.
Thank you, Christian. That's probably exactly my question, because so at this stage, as any investors, what would you like me to present and to show so that you'll be interested in us? Because we did have revenue, we did have positive earnings, in fact, which this platform may not even had it when they first started, uh, uh, but I don't know what I don't know. That's why I'm here, and if anybody could give me a pointers, thank you so much.
Who are you competing against if you're in Indonesia? You're competing against what? Gojek, Traveloka, Tokopedia, Bukalapak? Who are the people that you're up against?
Actually, none. Actually,
Okay,
that's
so
what the unique part is, because we are not an e-commerce. We are just a point that getting the both side to work with us. So we can even provide affiliates to even Gojek or Bukalapak, whatever e-commerce or big platform.
okay, so what does your platform? So do you have a platform? Are you building a platform? Is that what you're doing?
It is already done. It's a three-sided. It's a three-sided open source. So it's an open source for the three element, which is the producer. So any businesses can just sign up on their own. Any influencers or any ambassadors, even you and me, you can sign up for who you are to represent any brands or products or even services. And the end user can kinds of good deals. The three parties can just sign up on their own. Nobody needs to get involved.
Okay. So you sekarang di Indonesia kah atau di Singapura?
I started in Indonesia as our go-to market, but now we are in Singapore and we are already on our SaaS model, and we are in progress of getting approved by the government to be under the SMEs Go Digital, and we just obtained our ISO.
Okay,
Yeah, that's
wonderful.
basically for Singapore.
Okay, I'll be more than happy to look at what you think, but I'm just gonna you can DM me and we can talk a little bit more. I'm gonna yield the floor and help get everybody else to help you out if you have any comments. Terima kasih, Rose.
So Christopher, yeah, I will DM you. Thank you so much, everybody.
Amazing. Anyone else? Okay, Akshay, the floor is yours.
Yeah, hi guys. I'm Akshay here from India, and we basically started a e-commerce marketplace 2 months back, which specifically we deal in hype sneakers and streetwear, which is a growing category in India. My question to you all is that we are still figuring out that when we go and we reach out to investors, what should our approach be? Should we focus on the bottom line, or should currently we be only focusing on the top line and getting as much revenue as possible? That is a dilemma that we are facing, and for the next 6 months we don't know what approach to take. So I'd love to get your advice. Thank you.
Hey Akshay,
Uh,
if I can,
Akshay.
sorry.
Yeah, okay, okay, go ahead.
Hey Akshay, if I can just come in, can you let us know what stage your company is at exactly? I wasn't very clear on this.
So we've launched 2 months back. We've made almost 100,000 USD in sales, and we've signed up most of the major resellers in India, and we are getting good traction. Also, we get really good traffic. We've got around 15 to 20,000 people visiting, unique visitors on the website, and yeah, our monthly revenue is almost 30 to 33,000 USD.
And what is the feedback you're getting so far from investors?
we haven't reached out. So we are still we haven't even started making a pitch deck currently. What we want to, that every sale that we make, uh, we've lost out on a lot of sales because of let's say a $50 to $100 negotiation. So the whole thing is, we only do we should we focus just on sales and increase our revenue, or should we let go of sales and should we be working in a lean sort of a manner where we also focus on making money on each and every sale?
I think my short answer to this, and I'm happy for anyone else to chime in, is do whatever it takes to be able to bootstrap for as long as you can. In the space that you're in, I don't think you're at a space where you need investors. If you're making sales, if you're running your ship, do whatever option works better to be able to bootstrap for longer. That's my short answer.
Vatsal, just to add on to that, this is Dil Nawaz. I'm with the yellow background. Akshay, I will come next and I'll comment on to what you're saying. But can you quickly tell the name of your website? What's the portal like?
It's called Thrifter, Thrifter, Thrifter.in.
All right. So I'll quickly come back to you. Anybody else? I think Spencer wanted to
Yeah,
speak.
cool. Yeah, no. So actually, I think there's sort of two things here, right? So in general, I totally agree. I think what you've got to focus on is making sure you have a profitable business, because at the end of the day, if you're doing things that are unprofitable just to show growth, then that actually looks bad to investors, because what that signals to investors is that if we give you money, like, then you're going to spend it in a way that's going to push you further into that hole. And I think this is something that there's a lot of like stigma around in the valley or et cetera, or wherever, because it used to be a much more popular thing. But a really interesting statistic is 80% of companies that get venture backed now are revenue generating, where it used to be like 20, like many years ago, right? And so revenue is a bigger focus, but not just revenue, profitability, right? And so what's important, what it could be, and it depends a little bit on your business, but like if there's a clear path to profitability in the lifetime of those customers. So this is where I don't know the details of your business, but tech often has this slant where, like, okay, you can lose a little bit in the beginning and it doesn't have to be unit economic profitable because the lifetime value of these customers over the long run is so valuable. But if you're just losing money on like sales of a product that's not going to be a recurring thing with that customer, right, then it's much more problematic, because there's got to be some sort of benefit at the end of the day. And so I would say, if you're losing sales over small amounts of money, then is that a fundamental flaw in your business, in the sense of like, do you not have enough margins where you could have dynamic pricing? Because oftentimes what you see is, like, if you have the ability to give a discount, that's a really beneficial thing. This is one of the reasons that margins on a lot of companies being high is good, is because it lets you do stuff like couponing, like discounting. Sometimes it is worth, if you have a really good strategic partner who you're going to help build your product around or alongside, that maybe you give them a discount and it's not profitable to develop. But the last thing I'll contribute here is, like, you got to think, are you not profitable because of fixed costs or because of variable costs, right? And so if it's just the variable costs that, so if you have a really high fixed cost, it's okay to do things that are unit economic profitable. But if it's high variable costs and you're losing money, then that isn't a good signal to investors, because you're not really showing that the market's there. You're showing that there's a market at a price that's not sustainable for you. And the true last thing I'll say is, like, that also could not be true in the case of, like, you have economies of scale at some point. You want to show that there's a demand for this product at a certain price that is not unit economic profitable today because of the scale you're at, but with funding, if you iterate that process, you could get it to be unit economic profitable. But like, really what you're, like, at the end of the day, you're de-risking, is there demand at a certain price for this product, right? And then, is that meaningful to my company? Because in the long run, is that a price that I could charge and still be profitable? So that's how I would think about the decision. Hopefully that's helpful.
Thanks a lot. That was really insightful, Spencer.
Akshay, what's your total market size considering this product will be shipped into India? And then second question is, why do you need money for?
So market size, to be honest with you, we haven't really figured out what is the exact way to calculate the market size for sneakers and streetwear in India at this particular moment. And
Mm-hmm.
for that also, we are planning to take some help from people who do financial modeling, and they can probably give us a better approach of how to go about calculating the market size, which also looks logical, right?
All right.
And
And
sorry, what was your second question?
why do you need money? Like, what do you need it for?
Trend in this market currently. So basically, what we are seeing that the biggest resellers or the people who were selling the most, a lot of them are going, they lose, they go out, and a lot of biggers currently a lot on sourcing and not on the end. We want to grow fast, and we really want in front of the end consumer. There's a boom in the sneaker and streetwear culture in India. We have enough traction of it at that point.
All right. So here's my advice. More than happy to help you with the market size and other things. DM me on Instagram. Let's take this forward. But only if you are like looking for funding. Otherwise, you can also look at the other advices shared by the fellow mentors on the panel. You can go complete bootstrap and start making profits. With current readiness, I'm not sure you're ready for funding. That's a very honest advice considering I'm looking at a website and you are not ready with the market size and other information. But if you like want to do it, we can take the conversation offline. So yeah, you can take your call and all the best.
Sure.
Akshay,
Thank you so much. I'll
I'm
reach
happy
out.
to also chat with you separately. My LinkedIn is in my bio, so if you have LinkedIn, you can reach out.
Sure, I'll reach out to you for sure. Thank you so much, guys.
Thank you very much, Akshay. And I want to hand it over to Alicia. Alicia.
Hello, hi everyone. Okay, so we are next on Melissa, is that right?
Hi. Sama was kind enough to bring me on stage. There's always a lot to learn in this room. I do mainly celebrity strategic partnership deals, which means my clients are brands and advertising agencies, and I help them source celebrities for their commercials. I'm sorry, PR campaigns, events, and all that good stuff. I'm also an executive producer, and I have a couple of TV shows and films in the works. And I'm in this room because on occasion I need to raise some money. So I am here to learn, as well as on people that I might be able to help, an influencer or a celebrity.
Okay, Melissa.
I do not. Feel free to put me back.
Thank you so much, Melissa. Let's go ahead. Kanchan, welcome to the stage.
Oh, no problem, no problem. I'm back again to annoy you guys. I've been quite frequent here. So, my question is, what is the most common and the worst way you have seen a deal fell through during the due diligence process?
They lied.
I could give some examples because I've worked on over 200 transactions. I think the worst would be when involved in something illegal, this deal breaker. So, for example, breach of that would be for me the biggest deal breaker.
I think someone else wanted to respond to you.
I think that's very, very common with first time early stage founders, especially while doing early stage seed funding or angel funding. And this I've seen most common wherein they say that we have this, and when they go for a long form of conversation and go into due diligence, investors find out that it is not actually this hasn't been built yet. And I've seen this with couple of companies, even who got funded in couple of lakhs in India. So, and I have seen angels burning their hands quite a bit on this. So that's one of the biggest frustrations angels have, that they undermine technology, and because of lack of tech and founders lying on the tech side, I think the deals fell through.
In my experience, it's been oh, sorry, go ahead.
No, Tim, you're going to provide a lot of value. I'm just going to give comments, so please go.
Very quickly, in my experience, it's being overly forward leaning on traction, and like, I wouldn't say mischaracterizing or being too aggressive with the description of where certain contracts are, and then we'll reach out to companies that are alleged customers, and it's nowhere near where the founders kind of purported the deals to be. So I think that's very common. We find that a lot. Sorry, Jonah.
I was just going to say from
a very abridged experience. Getting some terms on the deal and finding out when you kind of get down to the nitty gritty that they kind of leave out some investors several times, and then adding a caveat right when you're near patient. And I guess that once you're really hooked in and you spend a lot of time, I'm not one of those people. I'll back out right as the pen almost hits the paper. But that irritates me, and I won't do deals with those people in the future, even if they're worth $1 billion. So be very clear on who's previously invested in your company, and if you are uncomfortable with them being previous investors, explain why, but don't hide it, and don't hide the terms of those deals.
What a great
Hi.
question, Louise. Yes.
Thank you so much. Startup founders who argue with the VCs before they've really listened to the VCs. Obviously, there can be times where you have to say something that's different from what the VC suggests, and you need to find a way to say it. But when it's argumentative and you speak over the VCs and you're just not open to suggestions, they don't really want to share your boardroom table with you after that. So I think one has to be very careful in that respect. And I must tell you a funny story that when I was pitch coaching on an accelerator program a number of years ago, I completely did a Simon Cowell on a chap pitching, and I'd never done it before, and I have never done it since. And I looked at him at the end of the pitch and I said, I'm afraid I'm not prepared to work with you until you change your attitude. And the next day he walked into the program and looked at me and stopped and sort of put his nose in the air and said, our marketing people have changed our tone. And I became a client of his after that. He completely changed his tone. He took it on board, and he's just fabulous now. And he was one of the fastest to get post revenue of the whole crew that were there. So attitude plays a big part. Thanks.
What great answers and what a great question. Look how that was done. Thank you. Do you feel like you have been served of Kanchan?
Yeah, I have been served. Actually, this has inspired me to ask another question if I'm allowed.
You've got 5 seconds. I'm just kidding.
Okay.
I'm just kidding. I'm just kidding.
Okay. So, in various places around the world, it's very hard to do some administrative work. It's very slow, and that sometimes just slows the startup down. Really slows the startup down. How can you effectively and honestly communicate it to the investor that yes, due to external reasons, we were slowed down?
I think if they're local investors, they would already know that. And investors are very, very smart in terms of figuring out whether they're lying or truly really doing it, because most of them have run multiple businesses. So for example, my entire background has been into tech. So if any tech founder is telling me that, hey, this is not working out because of XYZ reasons, I can always figure it out whether he's telling the truth or questions. That's it. And rather less than whether he's lying or telling the truth. But I think investors on the other side are compassionate enough to help the founder if he's really stuck or if it's a real trouble. So I think both sides work accordingly.
Okay, great. Was there any other mod that wanted to add to that? Okay, I don't see anyone. Thank you so much for your question. And we're going to go ahead and move over to Brad Karishna. What is your question? And welcome to the...
Hi, my name is, I usually go by Krishna. I'm a graduate student at Boston University doing my PhD right now. And I'm trying to spin out a company that kind of like takes some of my research and building design tools for life science automation. So the question I have is that I'm super early right now. Like this is pre-formation kind of stages. The big issue I'm seeing right now is that some of my pathways, like I can be eligible for some non-dilutive funding, but there are also some angel VC folks who are interested in what I'm doing. I basically did a pitch at one of the competitions just to see how it goes. And so my question is, how do I engage these people and not really waste their time, like I'm cognizant, I would love to work with them in the future, but I don't think I'm at a stage where I'm there right now. But I would also need, like, I could use their advice too. Like I'm not uh, yeah, it's my first time trying to for working on a company that would need to raise money and whatnot. So yeah.
Hey, Raj, this is Stan. I want to congratulate you on finding an opportunity that seems to have a great potential. I've worked with IP-based companies in the past that have spun out of universities, and I think that many of the investors completely understand the process, that there's non-dilutive funding out there. And as you might have heard early in this session, it's important to establish relationships. So transparent and say, hey, this is where I am. We're looking to raise an SBIR or STTR or work with your development office there at the university. It's definitely beneficial on IP-based deep technology to use non-dilutive funding as long as possible, because it is really difficult. It's the challenges and problems that you're going to face are unknown, and it can take much more than just 25% longer. It can easily take twice as long to solve some of these technical problems. But the really good thing for you is it sounds like you have people that are really interested. So keep what you keep doing, or explain to people where you are, and keep moving forward with your research. And if you have more questions, since you have quite a bit of experience in this IP deep technology side, you're welcome to IM me. This is Stan, and I'm done talking.
Thanks a lot, Stan. I think that was really useful. I'm gonna try. I'm trying. Yeah, I'm following you right now. I'm gonna try DMing you. I haven't used. Yeah.
Hi, this is Harsh this side. I'm not a moderator, but if given a chance, I would like to address that question as well.
Yeah, sure. Go ahead.
Cool, awesome. So essentially, I would suggest, you can be very upfront with them, when you're disclosing, that I'm looking more for advisory at this stage. However, I would suggest, kind of keep an open mind as well, because if they come up with some, a realistic or practical solution of helping you take to market quickly, and if you, really resonate with them, you could even kind of change your approach, compared to the conservative approach you're thinking of currently. If they have an alternative approach and, you go into it with an open mind, and they have something which really is interesting, you should take that up as well. You might have to change your current approach, but I think it could be worthwhile with their experience that they're bringing to the table.
Great. Thank you so much for that.
Alicia,
Rajat,
this is Akash.
yes.
Is it okay if I address him really briefly?
Oh, please, please,
So
please.
Krishna, I just like to say something that, so I would just think about it this way. Everybody is just people. People are just people, right? It might seem like intimidating that an investor has this power over like investment, but at the end of the day, you invest in people. And I'm very involved with NYU, where I went to school several times. And I mean, it's the beauty of being in a university and in education is there's no pressure under you. People understand that you're a student. And I think it's a wonderful opportunity that you get to decide what you want to do and explore and meet people. So I just encourage you to not be intimidated by any of it and just